Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I have two paper money trades for you today on two names coming out with earnings after the bell today. The one is obvious, Nvidia, but then we'll look at Salesforce also and its earnings expectations coming out after the bell. Let's get to our first trade of the day, and that is Nvidia. Now, Nvidia, it's had a pretty incredible run, right? From a magnificent sell-off down to below $90 to $86.62 was the low trade on Nvidia, all the way up now where it sits at $135, but still $18 off its recent highs of $153. So how do we look at a company like Nvidia? Well, you have to be careful of the expected move sitting right around $9. Does that seem high? Does that seem low? Or does that seem accurate? There's the question the traders have to ask themselves when you look at the expected move in a name. Remember, that expected move can go up or down. Right now, it's $9. So what I looked at in Nvidia is something in the call diagonal area, buying next week, June 6th, 135 call, right at the money, selling the 145 call. So I'm going $10 above where the stock is trading now, even though the expected trade is only $9. Could you adjust that? You could do 5, you could do 6, 7, 8, 9. Yes, you could absolutely adjust those prices, and there'll be trade-offs in there. So we put that in around $4.50. It's trading right there at $4.50. There's been very little movement with anticipation of Nvidia's earnings come out. It's staying in a pretty tight range today. So about $4.50 for the 1 week $10 call diagonal in Nvidia. The risk on the trade is the debit paid right around $445, $450 right in there, and the target is $10 above the market. Now, Nvidia has moved significantly higher than the expected move on some days, so watch for that. Remember, that market maker move is a reflection of the implied volatility of that front expiration, the event expiration. It's not the answer to the question. It's part of the question. We'll see when the reaction to Nvidia's earnings comes out. It's going to be a very interesting one. And remember, there's a whole sector of companies that will move along with Nvidia and its earnings. So that'll be something worth watching. So Nvidia, our first trade of the day. Let's get to our second trade of the day, and that is Salesforce. Now, Salesforce has been in the news lately with their recent acquisition. Remember, they're a very acquisitive company over the years. They took a little break from it. Now they're back in that game, and the stock had sold off based on that. It's got a high of $369. It's now $274. The expected move, $20 in either direction, up or down. So we took a little different tack here in Salesforce, and we sold in the May 30th expiration. We simply took that where the stock's trading now, took the expected move of about $20, and we sold the 295 300 call vertical. Now, we put that in around $1.05. It's trading closer to 95 cents or $1 now, but right around that level. Now, the risk on this trade is the difference between the strikes, in this case $5, minus whatever credit you take in. If you take in 95, it's 405. If you take in $1.05, it's 395. You get the math there on that. Short strikes minus the credit taken in. The credit you take in, whatever that is the max profit on this trade. And if you look at the probabilities on the 295 call, probability of finishing out of the money, 78.8%. Probability of finishing out of the money. Remember, the risk on the trade, difference between the strikes minus the credit taking in. The max profit on the trade is the credit taking in. So two earnings plays for today after the bell: a bullish trade in Nvidia call diagonal and a short call vertical in Salesforce, a high probability call vertical. Both have risk definition as part of their makeup. We do that every day on this show, and that is our show for today. For all of us here at the Daily Trader, have a great day and a great afternoon. We'll see you tomorrow with another edition of the Daily Trader. I'm Kevin Hincks.